Have you ever had that feeling that something big is happening just beneath the surface? A subtle shift that most people are missing? Well, that's what's going on in the silver market right now. We're seeing powerful signals emerge that point to a historic supply squeeze, a fundamental mismatch between what our high-tech world desperately needs and what the planet can actually provide. Welcome to the Bullion Signal Podcast. We're here to help you understand the major shifts in macroeconomics and precious metals so you can protect and grow your wealth in these uncertain times. Today, we're diving deep into the silver story, and we're going to break down exactly what's happening. If you find this analysis valuable, make sure you're subscribed to the channel so you don't miss our future deep dives.
Now, this isn't just a theory from the fringes. When one of the world's largest financial institutions, a giant like BNP Paribas, comes out and puts a number like $100 per ounce on the table, you have to pay attention. These are the institutions that manage trillions of dollars, and they don't make predictions like that lightly. It forces us all to stop and ask a really important question. So what is it that they see? What are the underlying fundamentals that could be powerful enough to justify such a dramatic forecast? Well, that's exactly what we're here to unpack. It's not one single thing, but rather a convergence of powerful forces. Let's start with the first and perhaps most misunderstood force driving this entire situation.
The first piece of this entire puzzle is demand. But you need to forget everything you thought you knew about silver demand being just for coins, bars, or jewelry. The real story, the game changer, is the relentless, record-breaking, and frankly insatiable appetite from the technology that is literally building our future.
Just look at these numbers for a moment. They tell a powerful story. Industrial consumption of silver is already at an all-time high. We're talking about more silver being used in industry than ever before in human history. And what's crucial is that it isn't slowing down. The forecast for next year is set to blow past that record once again. This isn't some temporary spike. It's a permanent structural shift in how much silver the world consumes.
And where is all this demand coming from? Well, it's anchored in the most critical, highest growth industries on the planet. Think about the green energy transition. Solar panels are being installed at an incredible rate, and they are massive consumers of silver. The move to electric vehicles. Every single EV uses substantially more silver than a traditional car. And then there's the backbone of our digital future, the 5G networks and the enormous AI data centers being built. All of them, absolutely all of them, require huge amounts of silver to function.
Now, this creates a really important economic condition that you need to understand. It's called inelastic demand. Here's what that means in simple terms. For a tech giant building a billion-dollar data center, the cost of the silver inside is a tiny, tiny fraction of their total budget. They have to have it. There is no other metal with silver's unique properties that can do the job. So if the price of silver doubles or even triples, they don't stop buying. They just pay the price. The demand is insensitive to price because the silver itself is an absolute necessity. Okay. So on one side of the equation, we have this record-breaking, price-insensitive demand. That's a powerful force. But for a true squeeze to happen, you need pressure from the other side. And that brings us to the supply. You'd think that with demand this high, miners would just be pulling more and more silver out of the ground. But the reality is, they can't. The supply side of silver is fundamentally broken.
This chart right here reveals the core of the problem. A staggering 70% of the world's newly mined silver doesn't come from silver mines. Let that sink in for a second. It's a byproduct. It gets pulled out of the ground when miners are actually looking for other industrial metals like copper, lead, and zinc. This means that the supply of new silver is not primarily driven by the price of silver itself. It's tied to the economics of completely different metals.
And this reality creates three huge roadblocks to increasing supply. First, globally, the quality of ore is getting worse. Miners have to dig up and process more and more rock just to get the same ounce of silver they did a decade ago. It's becoming harder and more expensive. Second,
There's been a massive lack of investment in finding and building new primary silver mines. You can't just flip a switch. It takes 7 to 10 years, sometimes longer, to get a new mine up and running. And third, as we just discussed, if global demand for, say, zinc is weak, mining companies will scale back their zinc operations, and silver production falls right along with it, no matter how high the silver price goes.
So what happens when you have this unstoppable force of demand crashing into this immovable object of a constrained supply? The pressure has to go somewhere, and we are seeing the consequences in the one place it can't be hidden: the world's physical stockpiles. The silver sitting in the major warehouses in London and New York is being drained at an absolutely alarming pace.
Let's look at the two biggest silver markets on Earth. In London, at the LBMA, inventories have plunged to multi-year lows. There have been credible reports of the market coming dangerously close to running out of physical bars to deliver. Now, over in New York's COMEX, the story's a bit more complicated. The total inventory number you see in the headlines can be very misleading because there's a crucial detail that most people completely miss.
Of all the silver sitting in the COMEX vaults, only about 36% of it is in what's called the registered category. That is the only silver that is actually certified, warranted, and available for delivery to a buyer who wants to take the physical metal. The other 2/3 is just sitting there in storage for someone else. It's not for sale. So when you hear about hundreds of millions of ounces in the COMEX, you have to realize that the pool of readily available silver is much, much smaller than you think. So when you put this all together, you realize this is no longer just a niche issue for commodity traders. This tightening market, this vanishing stockpile, has elevated silver to a matter of national strategic importance. And trust me, governments around the world, especially the United States, are now paying very, very close attention. It's no accident that the U.S. government recently and officially classified silver as a critical raw material. They did it because they see the writing on the wall. A shortage of silver directly threatens their goals for energy independence through solar. It threatens transportation policy built on EVs. It threatens economic competitiveness in the race for 5G and AI. And it even threatens national defense, as countless advanced systems, from missile guidance to radar, rely on silver to work. It has become truly indispensable. So let's just quickly bring it all together. You have these three incredibly powerful forces all converging at the exact same time. First, you have insatiable price inelastic demand from the industries of the future. Second, you have a broken, inflexible supply chain that simply cannot respond. And third, the visible results of this clash. Inventories are being drained globally. These forces together are creating one of the tightest physical markets for a major industrial metal that we have seen in modern history. And all of this leaves us with one final, very provocative question to think about. For the entire 20th century, oil was the world's most critical strategic commodity. It powered the global economy. As we push deeper and deeper into a 21st century that will be defined by electrification, by green energy, and by artificial intelligence, you have to ask yourself, is silver becoming the new oil? Is it the indispensable strategic resource that will underpin the next 100 years of progress? Based on the dynamics we've just discussed, that is the question that the market is forcing every single one of us to consider. Thanks for joining us on the Bullion Signal Podcast. If you got value from this breakdown, please hit that like button and make sure you're subscribed for more. We'll see you next time. And just a reminder, this content is for informational and educational purposes only. It is not financial or investment advice. Please do your own research and consult with a professional before making any investment decisions.